We will come to BAT. Now BAT is not administered and they can auction that gas to whoever is the best price. Plus BAT has another advantage that it will be delivered in Gujarat. So Gujarat is a very good gas market for all these players versus Assam. Assam is not a very big gas market until unless they are connected with a central hub, which might take some time. Assam has very limited set of people who or companies who offtake gas from there. Uh, so that might come in at a later point. But Gujarat is a very good gas market, and so just for the reference, they recently auctioned off gas from BAT, which was around 22% of the previous month's average of Brent. So if the Brent average is 100, they get $22 for per MMBT of gas in DROC. So that's a very big number. Generally, if you understand, oil gas used to trade at a discount to oil in terms of energy parity. This has changed recently after Europe also acknowledged that natural gas and nuclear both will be considered as green fuels. So because of the ESG concerns and all, they were not acknowledging nuclear as well as gas as green fuels. But recently, last 1.5 years ago, they included gas and nuclear. So gas started trading at a premium to their energy parity. Energy parity generally is around 16% of crude. Okay, in terms of the amount of energy same thing can produce at at the same value. So uh, if crude is $100, the same amount of energy can be generated at $16. So they both achieve energy parity at that. Now historically gas was trading at a discount to that energy parity. Now the gas has started trading at a premium to that energy parity because of its inclusion as a green fuel, right? So these guys got the gas auction for a 2 year offtake, and GSPC won that auction, and they will be earning $22, 22% of the previous month's average Brent, which is way above their cost of production. So initially, 2-3 years back, when this was not there, energy prices were also low. When I started understanding this company, I was putting the gas of BAT at almost $4-5, but this is a huge bounty that has come around, right? So this is a big development, and if you think $22 is high, if you take gas from IGX, you will get it at north of 35 dollars. So the energy prices or gas prices on the spot market are way higher than that. But $22 for a long-term contract is a very good contract. ONGC also recently came out with a tender with a floor price of $15. So that's sort of a new paradigm shift in terms of the gas prices that we see. Uh, is that clear?
Pranal, hope this is
Yes, that is pretty clear. Thank you for clarifying.
Great.
thank you, Pranal, for asking this question. So, Manan, there are more hands being raised. I'll just
Please.
So, Avdut, I have sent you a request. You can ask your question now.
Good morning. Thanks for the opportunity. Just I don't get how they get revenues. That part I don't get normally whenever I come across this company. Can you simplify it? Because some part they can sell it into the market as per the APM price. There is a ceiling, and some part, as we were discussing now, that BAT there is no restrictions. How they make revenue? Can you simplify it a bit? And how much they can sell it to link to APM prices and not to APM prices. That part is a bit confusing for me.
Right. So, Avdut, what happened in 2019? Government came out with sort of a marketing freedom. So, the DSF auctions that started happening, DSF are nothing but discovered small fields. Let's say ONGC has a big field, BAT, through which it is producing. but there are pockets of gas and oil around that field or through that field because it's a huge basin, but smaller pockets which ONGC cannot produce economically because it's too small for them. So those are the discovered small fields that government started auctioning off because they were just sitting and ONGC or Oil India were not producing from them. So they started inviting private participants to sort of get produce from there economically and sell in the Indian market. So the idea is for India to reduce its energy dependence outside. While there is gas, India has not grown gas production for last 10 years, and the production is sort of stuck or declining. Now the people who won DSF blocks, they have the government incentivized by giving them marketing freedom, so they can auction that gas off in Indian markets. They cannot sell outside, but they can sell in Indian markets at the auctioned off price. So everything before DSF started coming in, they were administered by APM.
Okay.
This is for gas. For oil, obviously all the companies can only sell in India, but recently they gave sort of before imposing that windfall tax, they also gave marketing freedom to sell to any people, any company in India, even private. So ONGC can only sell to IOCL or something, BPCL before that, but they sort of gave the freedom to sell to anyone in India. So that was limited sort of marketing freedom. But immediately after that, they imposed a windfall tax also. So these guys, essentially the field DROC was from before DSF regime. So they have to sell at price linked to APM, but they gave marketing freedom of sort that they can charge auction that gas and charge somewhat premium depending on their demand for that. The idea for government is to increase the gas production from India. BAT enjoys complete freedom and they can sell. They can. They don't have. They have. They are not limited by APM prices. So that is what my understanding is.
Okay.
Does that make it clear?
Yeah. So what this company does is they have won this discovered small fields. They will set up their machineries over there, and they will start extracting it and sell it. So